Saturday, April 3rd, 2021, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at the SDR and the IMF. There's been a lot of stories out in the last week or two. I noticed a couple of weeks ago that the IMF announced that they're going to try to allocate $650 billion worth of new SDRs, which is the equivalent of just over 450 billion SDRs. $1 equals to around 0.7 SDRs. That is the exchange rate. And the reason for them doing this is to supposedly help the emerging market countries or the third world countries. And of course, it's going to end up being the major countries who make up the SDR, their currencies that make up the SDR. They're going to be indirectly financing this, even though SDRs are conjured up out of thin air, and we're going to look into this. But I think it's going to be even more inflationary. And the interesting thing about this new allocation they're trying to come up with is that it's going to more than double the supply of SDRs that have been issued since 1970. So I'm going to just show you here how SDRs have evolved in terms of allocation. So as you can see here, SDR allocations, and this is from the IMF website. You can see that from 1970 to 72, the IMF allocated 9.3 billion SDRs. Then in 79 to 81, they allocated 12.1 billion. Then in 2009, after the '08 crisis, they allocated 21.5 billion. And then that was a special allocation they called. And then there was a general one, a big one of 161.2 billion. So right now we're up to 204 billion. So this new general allocation would more than double the supply of SDRs there. And I think it could be the beginning of many new allocations, so to speak. So before I also look at what John Eckster said about SDRs back in the early 70s. Let's see what this is all about, what SDRs are and what their role is. So it says, special drawing rights SDR, February 18th, 2021. The SDR is an international reserve asset, and it has no backing whatsoever. But let's continue. Created by the IMF in 1969 to supplement its member countries' official reserves. And why were they creating, why did they have to start this SDR back in 69? Well, because the US was having trouble keeping its gold reserves, because it was the period where it was inflating the money supply and not keeping up the issuance of Federal Reserve notes or paper dollars with the necessary amount of gold to back those issuances. And so other countries like France, Germany, Great Britain, Japan, they were demanding to get gold because they knew the US was inflating the system. So they came up with this idea of SDRs, right? So far, SDR 204.2 billion, equivalent to around $293 billion, have been allocated to members, including 182.6 billion allocated in 2009 in the wake of the global financial crisis. The value of the SDR is based on a basket of 5 currencies. So here they are: the US dollar, the euro, the Chinese renminbi, the Japanese yen, and the British pound. So what else do they say about the SDR, the role of the SDR? The SDR was created as a supplementary international reserve asset in the context of the Bretton Woods fixed exchange rate system. So supplementary international reserve asset. The major reserve asset right now is the paper dollar, or the petrodollar, if you want to call it. So this, in my opinion, the fact that they're doubling this allocation of SDRs is a sign that there is a bit of trouble for the US dollar, that they need something to complement the US dollar, right? The collapse of Bretton Woods system in 73 and the shift of major currencies to floating exchange rate regimes lessened the reliance on the SDR as a global reserve asset. Nonetheless, SDR allocations can play a role in providing liquidity and supplementing member countries' official reserves, as was the case amid the global financial crisis. The SDR reserves as the unit of account of the IMF and some other international organizations. The SDR is neither a currency nor a claim on the IMF. So there you go. It's neither a currency nor a claim. It's really nothing. It's really amazing. It's really helicopter money. It's really Weimar Germany, Reichsmark, I would say. Rather, it is a potential claim on the freely usable currencies of IMF members. SDRs can be exchanged for these currencies. So what's going to happen if this allocation is made? It still has to be approved. We're going to go through that in a minute. Let's say Brazil gets 50 billion of these SDRs. They could choose to exchange it for dollars, for euros, for renminbis, or British pounds. That's basically how it works. So as you see here, a basket of currency determines the value of the SDR. So here's the weighting of the major currencies. This is what the SDR is made up of. You got 41.375% US dollar. You've got 30.93% euro, Chinese yuan, almost 11%, 10.92, Japanese yen, 8.33, and pound sterling, 8.09. So with that, I wanted to show you what Mr. Eckster said about SDRs. And this was back in the early 70s. Some of you may know who John Eckster was. Some of you may not. Just to give you some background, he was a central banker. He worked for the New York Fed in the 50s and 60s, if I'm not mistaken. He also worked for Chase Manhattan Bank. He was also involved in helping found the Central Bank of the Philippines, the Central Bank of Ceylon. Well, nowadays it's called Sri Lanka. So he was a central banker. He knew what he was talking about. And he wrote this essay for the American Institute for Economic Research back in 1972, June 72. So that was right around the time where you had Nixon closing the gold window a year before. And then the next year in 73, you had the complete abandonment of the Bretton Woods system, in that the major currencies started floating against each other. So this is what he said: currencies today are IOU nothings. And I'm going to come up to the part where he talks about the SDRs and the IMF. So let's just see what he calls money, what money should be, right? He says, now that the international monetary system we have so long known has broken down, the world is groping through monetary reform for a new one. It is time to consider some fundamentals. What is money anyway? First, it is a means of payment or medium of exchange. I prefer the first phrase. It is simpler. We all use money to pay our bills, to buy goods and services. We also accept money when we sell. Second, it is a standard of value. We quote values of goods and services in terms of it. The resulting ratios are prices. Third, it is a store of value. We hope to avoid loss by holding it. Money holds its value if it is scarce and remains scarce. Scarcity is the keystone of store of value money. So this is where it gets really interesting here. So he's talking about what the monetary system was moving towards, and it's still the same monetary system today. So this applies even more today. He says, today, no money in the world fully performs all three services. National currencies are being used as means of payments and standard of value money, but none in this inflationary age is an assured store of value money. Well, and that's why gold since then has gone from around $35 or $50 an ounce to over $1,700 now. It's been an inflationary 50 years. Don't be fooled by politicians and central bankers telling you there's no inflation, right? In fact, a foremost concern to voters and politicians everywhere is that so many currencies are so rapidly losing their value in terms of commodities and services. Commodities like gold and silver, which are being used as store of value money. Yes, they are store of value money. Some people will argue, oh, they're not money. Of course they are. They're money to me. They're money to someone else, maybe not to you. To you, it might be a commodity that you trade in the paper markets, but it's still money, even though we're told it isn't. It doesn't change it, right? Are not being used as either means of payment or standard of value money. Thus, the world we have so long known, in which most currencies are redeemable at a fixed price in a store of value money like gold, is in disarray. People are confused and wondering what money they can trust. Sensing the instability of the system as a whole, they turn day by day from one means of payment to another in the foreign exchange markets, and much more gradually to store value money like gold in the London and Zurich gold markets. So basically he's saying, yes, people are trading dollars for Deutschmarks or French francs. Those were the currencies at the time. There's no euro, trying to see which one is going to hold its value. But as he says there, eventually and gradually, people will turn to the store value money. And that's why I always say that it's useless to hedge fiat currency debasement with other fiat currencies, right? So let's go now to the part where he talks about the SDR, because that's where I wanted to turn to here. So this is what he says in page 2 here. In recent years, there has been an attempt to substitute so-called paper gold or special drawing rights, SDRs, in the International Monetary Fund for real gold. So they considered it paper gold, right? One high IMF official is even reported to have called gold metallic SDRs. If used seriously, such an appellation flies in the face of marketplace assessment of store value money. So there you go. John Eckster, central banker, the man who helped found central banks, worked for the major Wall Street banks, worked for the New York Fed, saying that SDR is not a store of value money. It's inflationary, right? So he continues, the SDR has no obligor, no promise to pay any store of value money at a fixed price, and no fixed maturity date other than a complicated reconstitution provision. It cannot be sold at will, only by central banks in deficit, and only to central banks strong enough to be designated by the IMF to receive them. So it is a who owes you nothing and when. And it does not even pay a market rate of interest, only 1.5%. If central banks ever monetize them in significant amounts, they will have moved from the days when they issued their IOUs principally to buy enduring store of value money like gold, to these days when they issue their IOU nothings principally to buy governments' IOU nothings, to days, and I think that's where we're arriving right now, to days when they would issue their IOU nothings to buy who owes you nothings. So it's going to be a complete farce. SDRs make a complete mockery out of the monetary system, even more than it already is. So he says, in days to come, international monetary formers will have to consider whether these new kinds of money will produce a stable monetary world. In the world's marketplaces, will they hold their value against goods and services in general? More particularly, will those issued by different central banks hold their value against one another? Most particularly, will any of them hold their value against store of value money like gold? So now let's look at the story that's been out for the last few weeks about this new allocation of 650 billion SDRs, $650 billion worth, of course. So let's have a look at what the IMF is saying about it. Press release number 21/77, March 23rd, 2021. So IMF executive directors discuss a new SDR allocation of US dollars 650 billion to boost reserves, help global recovery from CV-19. So let's go through this. And then we're going to see how important the United States is in terms of the IMF and the voting on these procedures. Basically, the United States has a veto, and we'll see why. Kristalina Georgieva, Managing Director of the International Monetary Fund, IMF, issued the following statement at the conclusion of an informal discussion of the IMF's executive directors on the technical case for a special drawing rights general allocation. So it's a general allocation, not a special one. So this is what she said, open quotes. I'm very encouraged by initial discussion on a possible SDR allocation of $650 billion by addressing the long-term global need for reserve assets. A new SDR allocation would benefit all member countries and support the global recovery from the crisis. It would also be a powerful signal of the IMF membership's determination to do everything possible to overcome the worst recession since the Great Depression. So you can see that they like using crises to bring about changes like this that people would never usually accept. Something created by an institution. IMF has really no political backing really by the general public. Who elected this woman, Kristalina Georgieva? I didn't, you didn't. And they can just create value, supposed value, out of thin air in the billions, hundreds of billions of dollars. It's crazy. So let's continue, though. To this end, executive directors conveyed broad support among fund members for IMF staff to formulate a proposal for a new SDR allocation equivalent to $650 billion to provide additional liquidity to the global economic system by supplementing the reserve assets of the fund's 190 member countries. What I would say as well, this is going to attach a lot more strings to sovereign countries as well if they buy into this scheme. And unfortunately, I think a lot of politicians from these countries will buy into it. And we know the IMF, having read John Perkins and Confessions of an Economic Hitman, their purpose in the IMF is basically to indebt these countries, pull the plug, and then take over their natural resources and very precious assets, infrastructure. And who's really behind the IMF? Well, it's the central banks. It's the big Wall Street banks, City of London banks. And you might say, well, the US Treasury is involved. Well, but the US Treasury, the UK Treasury, the central banks, they're all one. They just pretend that they're separate. So this is really a banker's scheme to take over the economies, the natural resources of poorer countries. Unfortunately, I think a lot of these countries, like Argentina, Brazil, and others, they keep making the same mistake. They keep borrowing from the IMF. And why do they do that? Well, because the politicians, they benefit a lot from these schemes, I would say, and the elite as well. So, she says, I intend to present by June a formal proposal to the executive board. So this is by June, to consider a new allocation of 650 billion based on an assessment of IMF member countries' long-term global reserve needs and consistent with the Articles of Agreement of the IMF's mandate. IMF staff will develop new measures to enhance transparency and accountability in the use of SDRs while preserving the reserve asset characteristics of the SDR. In parallel, staff would also explore options for members with strong financial positions to reallocate SDRs to support vulnerable and low-income countries. If approved, a new allocation of SDRs would be a substantial direct liquidity boost to countries without adding to debt burdens. So something for nothing? I'm not too sure. So this is supposedly not going to add to debt burdens. It would also free up badly needed resources for member countries to help fight the pandemic, including to support vaccination programs and other urgent measures, and it would complement the range of tools deployed by the IMF to support our membership in this time of crisis. So let's see what else they say here. Background: under the IMF's Article of Agreement, the managing director may make a proposal of an SDR allocation if the managing director is satisfied that the allocation would help meet a long-term global need to supplement existing reserve assets in a manner that will avoid stagnation and deflation, as well as excess demand and inflation. So it's going to be a perfect thing. It's not going to create any deflation or inflation. And there is broad support among IMF members for the allocation. Once the managing director's proposal is concurred in by the executive board, it would be submitted to the board of governors, whose decision approving an SDR allocation would require support by members representing 85% majority of total voting power. So that's the key number there, 85%. And why is that? Well, because there you go. The United States has 16.51% voting rights. So if the United States doesn't vote for this, it doesn't get off the ground, because you need 85%. If the US had, let's say, 14%, it wouldn't be a problem. So basically, it's the Treasury and the Federal Reserve that are running this. So does this mean that, because I've heard people saying that it's going to be the Fed that's going to provide these funds? I don't think so. I think the IMF is just going to conjure it up out of thin air, $650 billion worth, and it will probably be agreed. I would think, politicians, central bankers, they love extra liquidity. Especially if it doesn't create any new debt, if it's totally out of thin air, if it's totally Weimar-like. And what will happen is they will allocate it, I guess, to countries that need it, emerging market countries. And they will be able to do what they want, exchange those SDR allocations that they get. Let's say a country like maybe Lebanon that's in trouble, or maybe Brazil or Uruguay or Thailand. They will use their SDR allocation. And let's say they need to buy things from China or other countries. They might decide to exchange those SDRs allocation to renminbi or US dollar. And all that will do is create even more demand in the world economy. And I think the important thing here is to note that these SDR allocations are getting bigger and bigger. If you saw earlier that chart, and this one that's supposed to go through in June is going to more than double the supply of SDRs out there. It will be interesting to see if this will be recurrent, if we're going to have to wait another 10 years for another big one. I have a feeling we won't. It will probably be an annual thing, but we'll have to keep an eye on it. So yes, it's more of the same. It's not even I owe you nothing. It's like John Eckster said, who owes you nothing? It's just crazy. So yes, get ready for the IMF helicopter, and they're going to drop, SDRs, whatever that is. Yes, we won't be able as individuals to pay with SDRs. It's a reserve asset that is used amongst sovereign nations, treasuries, and central banks. So there you go. I hope this clarified this SDR situation. Yes, it's the US, of course, is a big part of the SDR allocation, but it's not just going to be the US that is going to get hurt from this. It's the whole world, because it means more inflation, more debasement of fiat currencies with this new allocation of SDRs. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great rest of the weekend. Take care. Bye.